Welcome to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. Whether you're watching us live on YouTube at TradeEZ or listening on your favorite podcast platform, we've got you covered. Subscribe, join the community, and get ready to dive into real talk and real market insights. Let's get started.
Hey, good afternoon, everybody. I'm Kalayjian, and welcome to the Bull, the Bear, and the Ugly. Well, we saw a lot of volatility today. Right out of the gate, the S&P futures were trading around the 60-61. We've dropped all the way down to 59.94.5. Rallied back up to 60.24. Dropped to 60.05 and then ran right back up to 60.48. And then at the last 2.5 hours of the afternoon, they got absolutely kabooshed. Coming into the day, I said the pattern would be the 30-minute time frames. I nailed it right to the T. I said after Friday's sell reversal on the 60-minute time frames, you're going to get a bounce, you're going to get a push up, and the 60-minute time frames had the rising ADXs, the big selling pressure, monster negative MACDs, and the 30-minute time frames got overbought around 1:30, exactly 1:30, into those negative MACDs, the big selling pressure, the rising ADXs, and boy, oh boy, you could have thrown a dart. I'm going to show you Avago, NVIDIA, the spiders, the Qs, SMCI, everything aligned perfectly at 1:30. And let me show you what I'm talking about. But before we do that, I want to show you the negative pattern on the opening first of all. All right. So first of all, we look here and you can see, I'll change the screen to the 60-minute time frame here. When you push up on the opening the way we did and we gapped up and you see you can see the Qs right here, 529.07. We opened at 577.88 and we pushed up. And you see the negative MACDs here on the 60 and on the 30-minute time frame. And then you see these rising ADXs on the 30-minute and the 60-minute with this selling pressure. There's no way they're going up. There's no way they're going up. This is a monster sell divergence in a negative trend. This is again, I'll say it again. It's a monster sell divergence in a negative trend. When I come in every morning, the first thing I do when I walk through that door, I look at the bigger time frames. I blink and I memorize all the bigger time frames, the 30 and the 60-minute time frames. So when I recognize, right, the big selling pressure, the MACD's negative from Friday after the drop we had. Remember, on Friday, we had the 60-minute QQQs reversed to sell, right? And so now in my head, I'm already thinking short, right? So basically what happened was on the opening, we got the push up. Everything was for sale. I mean, they opened, they ran them, and I said, let them have them, right? You can see these negative MACDs. This pattern is a monster sell divergence. It basically was the highs of the day. Right? So when you see this type of pattern, okay, and look at the negative MACD on the 60-minute time frame. All right. Look at the negative MACD on the 30-minute. The ADXs are rising. That means a significant trend is in place. My algo is negative on the 60 and on the 30. Big selling pressure. This is a sell divergence in a negative trend. You pushed up to new highs. And the MACDs and the ADXs and the selling pressure, everything just absolutely put it right to bed. Boom. Let them have them. And then the trade of the day was after we got the push up, we called a really great short on the 5-minute time frame, roughly around the, I think it was the 11 right here. We called a great short. And this pattern right here was the first bounce on the 5-minute time frame. We rallied from the lows here, rallied right back up into the negative MACDs. S&P futures at that point rallied from 94 S&P futures rallied from 94.5 up to 24, 60, 24. I said, look to short them. I would look to short them with your eyes closed, and immediately within about 15 to 25 minutes, the S&P futures on this pattern dropped to 60.04. So they dropped about 20, right? Then we got a buy reversal on the 15-minute time frames, and I'll show it to you here on a lot of the names. Which, when you get these buy reversals here, right here on the 15, a lot of times it's saying 85% of the time that the lows are in for the day, and B, which they did, the lows were in for the day, and B, this pattern is going to set up the next pattern to short on the 30-minute time frame. And let me show you. So when we got the push up here, roughly around 1:30, and I'm going to go back to the Qs, and I'm going to go back to the overall market. The NASDAQ futures at that time were trading to 21,640. NASDAQ, from the highs of this 30-minute pattern, okay, pretty much dropped about 200 and about 240 points. S&P futures were trading 60.48 and dropped 50 at the end of the day. 50 handles at the end of the day. And here's the pattern. When you see an overbought condition, now remember, on Friday, we got the big sell reversal right here at 10:30 in the morning. And you can see the negative MACDs, the rising ADXs. Now, come on. This is classic textbook 101 technical analysis based upon the way I teach, right? When you see a push up right here, the overbought condition, right into the 10-bar weighted moving average, into the negative MACD on the 60. And I said today, the 30-minute time frames are going to be the story. I said the 30 minutes are going to get overbought into that negative MACD. Market's going to run into a brick wall, and did they ever? Everything lined up, and I'm going to show you all the patterns. So here at the 30-minute time frame mark, you can see the push up, the overbought condition on the 30 into the negative MACD here. This is a Picasso. This is an absolute Picasso. The market had nowhere to go but down. Overbought into the 10-bar weighted, overbought into the negative MACD. You want to see names? Look at Avago. Avago. Perfect. Look at this. Avago. Overbought into the negative MACD, ADX. They all had the same pattern. The guy who bought 216 in Avago, he jumped down 9. Okay, look at this one. NVIDIA, same pattern. NVIDIA, look at this NVIDIA. You pushed up, just like I said. The guy who bought 138.59s, he jumped. Look at this. Overbought into the negative. Look at my cursor. My cursor is the current bar, the bar right here, right? You pushed up into the negative MACD. This one, the ADXs really weren't rising, but you had the negative MACD. The price action, you're making a new high, and the MACDs are negative into. This is a no-no. This is insanity. But who cares? We caught the short. That's all that matters. And then look, overbought on the 30-minute at 1:30. Everything lined up into the negative MACDs. This is an absolute Picasso. And if you look at SMCI, another one. Here, SMCI pushed up to 54 and change. Where I was shorting this above 54.5, right? Look at this. Now, it didn't drop as much. All right, but still it dropped. Okay, overbought into the negative MACDs. The ADXs were rising on the 30, rising on the 60. These are classic patterns that repeat themselves up and or down. When I came in this morning, the first thing I said to everybody in my community from 8 o'clock all the way till the market was about to open, I said the 30-minute time frames are going to be the pattern of the day. When you get the sell reversals on the 60, as we did on Friday, then you wait patiently for the 15 and then the 30, and everything aligned at 1:30, and that's why the market dropped. So we had Bitcoin, another great pattern in Bitcoin. Bitcoin had nothing but sells all day. But for those of you who trade Bitcoin, it's so important to understand that during the US session, you need to look at the IBITs, right? And I'll show you. So today, when you look at IBIT, which is the underlying ETF for Bitcoin, a lot of people like to trade that, okay? You can see here, the 30-minute time frame reversed to sell today at 1 o'clock, all right? I'm sorry, on Friday. I apologize, okay? And then this is the bounce right here. This is the first bounce on the 30-minute time frame after the 30 reversed to sell. Look at this negative MACD, rising ADX, humongous selling pressure, IBIT right here at 1 o'clock, right above 54, and it dropped nearly $1. Now, that's a big move in Bitcoin because Bitcoin was trading 95,200 and Bitcoin dropped down to 93,700. So a drop of 1,500. This is why I tell people, and I taught this to some of the top guys top traders in the world, that if you're trading the indexes or a commodity or Bitcoin and there's an underlying ETF, you need to look at the underlying ETFs during the US session. Because to be bluntly honest with you, I would never have been able to capture this pattern on the market looking at the continuous contracts on the S&P futures, but I resorted to looking at what? The underlying ETFs. I studied this. It took me years and years and years to in my research, and this is what I want to share with you each and every day. What else? Lily has some great moves here today. Lily is an animal. It moves $5 to $10 at a clip. And gold. Let me show you GLDs today. I'm going to type in the gold, the GLDs. So this is one of my favorite patterns in the world. All right. When the GLDs reversed to buy on the 30-minute time frame, it correlated with the 15 and the 60-minute time frame. When the 30-minute, when you have a buy disconnect, the 15 on my indicator 4 is bullish and the 60 is bullish on indicator 4, and when the 30-minute time frame reverses to buy, let me tell you, it's one of my most powerful patterns when the 30 correlates with the 15 and the 60. And then when I look to buy the first pullback on the 5-minute time frame, and you can see here when this happened, I'm going to show you this right here. Look at this beautiful pullback right here. The GLDs got down to 271.87 and rallied about 4.5. That meant that gold futures were trading gold futures at that time when they pulled in right here. You can see the gold futures pulled in beautifully here below 62 and then rallied to 66. So ran about $4 in about in about 30 minutes. Again, when you're seeing the markets move 50 handles up, 50 handles down, and the pattern set up the way they did, unbelievable day, unbelievable day. The volatility, even though the volume was light, the volatility was still here. And the patterns were Picassos, all right? Picassos. I want to show you a little tidbit here, all right, that you should be aware of when you join my live room. You can see the 60-minute time frame here in Lily, reverse to buy right here. Now, the rule of thumb is, and I wrote this, is that, and I was shorting Lily up around here, okay? When the algorithm reverses to buy on the bigger time frame, the 30 or the 60s, all right? And I have it up here twice, but let me just show you here. When the algorithm reverses the buy and you get an overbought condition, the algo reverses the buy. When the MACDs are above the pivot, you take the short right here. You look for a sharp pullback, and Lily dropped 10. So again, when the algorithm reverses the buy, when the MACDs are above the pivot, you take and you get an overbought we had a 96 overbought reading. You take the short, and Lily dropped 10. Beautiful, beautiful pattern. Okay. PLTR, very, very active, down 11. Remember about a week ago, I said if PLTR gets above the 125, let them have them. PLTR is down 35. What else? Okay. A lot of Microsoft, very active today. There's so much to show you here. But if you want to join my live stream, just text me at 914-500-7484 or give me a call. When I get back, I will tell you what I'm expecting for tomorrow. All right. So we saw a lot of weakness here on PLTR. We saw Avago get kabooshed here. We saw Meta down 16. A lot of stocks really looking ugly here today, right? And about a couple of days ago, I said I was looking for the markets to get to 6180 to 6210. And then I thought they were going to drop to 5980, 5990. And we got to 6166, 14 points off my first target on the S&P, and then we just dropped. Now, so basically that's gone. And so what I'm looking for now, okay, is tomorrow I'm going to look to see if we get these 60-minute time frames get deeply oversold. All right, in the single digit numbers, and then I'm expecting a push upward. So I think you can see at the end of the day, the S&Ps, I had called along in my live stream, the S&Ps just rallied about 9, 10 off the lows. So I think if we get one more push down tomorrow and we get these big time frames, we're already getting oversold on the 30s, but I'm going to get one more push down. If we get one more push down and these 60-minute time frames get into single digit, and I'll show you what I mean here. If you look at the spiders here, you can see that the spiders right now, we're at a 38. So I want to try to get this into a deep oversold condition here. And then I think we're going to get some type of a big move on the upside. Some names I want to look at. I'm going to show you on the dailies. These are some really great patterns after earnings. Look at Robinhood. If Robinhood tomorrow, okay, gets anywhere into the, you can see the low here, 47. If Robinhood, you can get Robinhood anywhere between the 46 and the 48.5, the deep oversold condition. Robinhood, you can see, is down from the 66 level. I think Robinhood can be a really great long here, especially with this oversold condition. Look at Airbnb, Airbnb. I always get the symbol messed up here. Oh, Jesus. Okay, look at Airbnb setting up a really great long here. Airbnb is down from 163, it's down almost $19, and you were close. So I'm thinking if Airbnb gets between the 40.5 and the 43.5 range, I'd be looking, especially getting oversold into this positive MACD, the same type of pattern as Robinhood. Look at Costco, COST, and now Costco rallied 10 off the lows. So if we get one more push down in Costco, anywhere between the 10.15 and the 10.25 range, I think Costco can be another great long here, especially with the deep oversold condition on the daily. All right. And last but not least, look at Roku. Look at this. Roku rallied from 96, 97. I doubt it. But if we can get one more push down in Roku, all right, below the 87.5, I would be looking to buy Roku. And one more, PLTR. Okay, again, like I told you, all right, looking at the daily, I think this gap is a really high probability of getting filled, and that would be 84.25. You get to 84.25, which is only $6 away on PLTR. I say I would look to back up the truck and for a move back up to 95 to 100. The day of seeing 125 right here, or 125.41, take a picture. That ain't happening for a long time. The guy who bought that, I told you, he jumped. Okay, so I think if PLTR come in and fill this gap, get a severe oversold condition, get into single digits, I think PLTR will set up for a great long. So that's what I'm looking for tomorrow. All right, again, gold, very bullish here. I'm still looking for at least an 80 to 100 point drop in gold. I hope I get it because I think the next, if we do get that push down, you take the measured move on gold, gold will be 30, 50, 3100. When I get back, I want to tell you a story that just tore me apart all weekend. So Friday, short week, I was mentally exhausted. And then on top of it, on Saturday, I get a text from some very, very good people, really love them to death. And they've been doing so well, so great. And I asked permission if I could tell the story, but I'm not going to obviously mention names or anything like that. But it really just hit me hard all weekend. And I really do look at this, I take this to heart. And because my legacy depends on your success, right? And every single day they have a goal of, making $1,000, $1,000, $1,000, and they stop, right? And there's nothing wrong with that. There's actually, it's great, being very consistent. They hit their goal, they stop, they sit on their hands and they watch and they paper trade and they keep learning. That's what this is about. Because there's nothing worse than taking money, you're up money, and then letting the market beat you at the end of the day. That's the worst feeling in the world, right? And so they asked me to speak to them. I got really busy. I got slammed this weekend. So many calls, so many things I was involved with. I finally get an opportunity to give them a call sometime Saturday afternoon. And I hear the story that they really, they lost a lot of money, a good portion of the money that they have. Not everything, but about 20%, right? So net, they, after being up all this money that they're making, they're down about 10 for the year, right? 10,000. And I said to them, I listened, I didn't say anything. I said, well, that's not trading, right? And, well, this and that. And I said, I said, you got to be disciplined here. If you make 1,000 every single day and you lose 1,000, you have, in my opinion, you have to stop, right? And that's it. It ain't your day. Next. There's always another day. There's always time, hopefully. And there's always another a trade out there, right? But the worst thing in the world is the lack of discipline, right? And the revenge trading. I can tell you, I have not met one person in my life who is successful based upon revenge trading. And to keep going in and trading when the market's dropping like a knife and doing this and whatever they were doing, you just don't do that. Preservation of capital. I'm not bigger than the market. No one's bigger than the market. Even the biggest guys I know who are worth billions are not bigger than the market. So this message is really about, one, when you hit your goal, you stop. And the worst part was they were up on the day and they hit their goal. And they gave that back and another 20% on the portfolio. So they're great people. I'm going to do everything I can to help them get back on track. But it's a tough lesson. You don't need to have a lesson like that in your life. And I said to them, I'm going to mention this. Can I have permission to mention this on my podcast? Because I said, this happened for a reason for you and a reason for me to teach people and explain this. You got to trade with stops. When you hit your goal, you stop, right? You have to have the most unbelievable amount of discipline in the world to play this game, right? This is something that I tell you, I stress upon. And when you hit your goal, today I was driving, right? I went to go get something and somebody called me and says, I'm up a couple $1,000. I'm way past my goal. I said, okay, if it was me, I would stop, right? If it was me, I would stop. He says, yeah, I'm going to go get something to eat and I'll look and see what happens. And thank God we had about maybe an hour left to go, right? From an hour and 20 minutes from the time I got back. But the point is, no one is bigger than the market, right? And so when you're consistent every single day, you can't make 1,000 every single day for 15, 20, 40 days and then go, boom, you go postal. You explode, right? And you just keep saying, well, you know what? Well, I'm up on the month, I'm up on the year, whatever, I'll give back. No. You have to maintain the mindset of whatever your goal is every single day. You cannot, once you hit that on the downside, that's it, right? You have to stop. There is no way you can come back unless you now have to take 5 steps back, and now you have to get out of a hole, and you have to now be able to trade really the most perfect patterns to get that money back, right? And they were doing great. They're doing great team, and they're doing great, but you just can't. It's a mistake. I grant it, we're all human, but you have to learn from that. And this is why I try to heed everybody before a disaster like this happens. It's very, very important. My father once said to me, the greatest gift in life, Stephen, is the ability to listen. Now, by law, I can't give investment advice. I don't try to give investment advice. I talk about my journey, my beliefs, and my experiences, and my knowledge and wisdom in trading, right? But I don't think anyone, I know for a fact, is bigger than the market, right? And like I said earlier, I know some of the biggest guys, and they're not bigger than the market, right? So revenge trading is the worst thing in the world. Trying to fight to come back. Listen, nobody likes to lose. I hate to lose, right? But I know that there's always a next trade. And when I'm wrong, out, next, right? I don't look back. I'll tell you, it's funny. Somebody asked me over the weekend, what drives you crazy the most, right? Maybe probably losing. I go, no. I learned from losing, and I learned to see what I did wrong or whatever. I mean, sometimes a news event will come out and, sometimes, a spike up on the S&Ps or a name or news comes out and you can't help that. That's not your fault, and that happens. So far, I'm 4 for 4 with Trump tweets this year, going in the right direction. But I said, what drives me crazy the most is missing a trade. Like, for example, if I'm offering a stock and it's ticking like 2 cents below it and it drops like $1, right? Or a week ago, I said, look to short the S&Ps. I was so confident on this pattern that I said, I'm going to get a smoothie. And I said, look to short them 24s. I think 61.24, another about 100 and something handles higher from here. And I said, look to short 61.24 to 61.29. The high was 61.23 3/4, and it dropped 30. So trades like that could drive me crazy. But also what drives me crazy is being able to talk to so many people from around the world and the lack of discipline. You have to have discipline. That's why it's, like I said, consistency, discipline, confidence, patience, and passion. Right? I told you I took the game of baseball and I took those 5 words. I'm not going to go in the batter's box and the ball is up here and swing like this 3 times and the guy's just going to throw at my head. Lack of discipline, right? I know it's a stupid analogy, but the point is you have to maintain discipline. And revenge trading for the 3rd or 4th time is a no-no. When you set your goals for the day, and the irony of this is that they hit their goal early in the morning. So you stop. You stop. You just beat the market, right? You beat the market. You just beat the market, and now you did what you did. But again, great people. They'll come back, okay? And I'll do everything I can with, through the live stream and through the technology and through the helping them with everybody with the right patterns to be able to get back on track. Okay, it's an aberration and things happen, but learn from this, learn from what they went through. I just don't want to see anybody else have that same experience. All right. So thank you for joining me. Again, please follow me on Twitter at Steve Kalayjian. And if you want to join my live stream, text me at 914-500-7484. Come next week. I'm launching my new platform, sktrading.live. So there will be a wait list for that, and I will be sending the link out. Have a great day, everybody. God bless, and God bless the United States of America. Be well, everybody.
Thanks for tuning into the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. If you enjoyed today's episode, be sure to subscribe on YouTube at Trade Easy or on your favorite podcast platform. We'd love for you to rate, review, and join our community for more real talk and market insights. Until next time, keep trading and stay sharp.